And now we can look at volume for key areas of information. So we see really three areas of the chart where volume was high. We can see it was, of all of these areas, it was high on the right hand side. But if we look on the left, we see some areas of high volume here. And if you look at the candles, we can see there's a red candle here with a strong wick on either side, a relatively small body and a strong wick. So the range is actually quite high. The range is possibly the highest of all the candles on this chart, apart from the candles at the end. And we see the volume here was high. And this indicates something. Normally when volume is high, we look at range. The range is quite high, but it was quite a volatile day. And we can see that what this indicates is there may be a potential change in the balance of power. So we can see on the left-hand side of this move that this was quite a significant upward move. And this significant increase in volume with this candle, which shows very volatile price movement in that day, it indicates a potential change of the balance of power. And we can see that after this candle, the upward move stopped very soon after it, and the price went sideways or slightly down for a number of months. So here, the next candle, which has significant volume, occurred in early 2020. It looks like it is in January, and you can see it is much higher than all the candles preceding it. It really stands out. You can see this red candle is a very large range, similar in range to this candle here, and you can see the wick is all on one side. In this candle, the wick was on both sides, the top and the bottom. Here, the wick is all on the top, and this indicates that there was some demand that came into the market, but supply overcame that initially. So what we expect after that is to see how the market reacts after that. So one thing we shouldn't conclude is that because this indicated a strong amount of supply, we shouldn't conclude that the market's going to fall. And in this case, it didn't fall at all. But what it means is if the market is going to rise, it has to deal with this supply somehow. So this is why prior to this big move here, we saw some retesting of that level, and then market went down a little bit to regroup itself, and then there was a stronger move through that level. So this volume indicated a very key candle here. And at the right hand side, so we see a huge increase in volume for these few days. And what we see is the price reaching a new high. It was higher than any of the highs that we see on this chart. And there was some reaction here, and it went back down. And we can see, I don't have the facility to draw a line, but if we draw a line from these wicks here, we can see it's going to draw very neatly across the tops of these lines and across these wicks. So this level is now becoming a level of support after it became a level of resistance on two key times here. So this is what we often see. A level of resistance can be a level of support, and a level of support can turn into a level of resistance in the future. So here this is a very key action taking place here for a few reasons. One is the large increase in volume we see here. Two is this red candle and this green candle. I think they have the largest range of all the candles on this chart. So we can see the volatility is very high. And it's not clear to us the balance of power, whether demand or supply, whether buyers or sellers are in control. But we know in general over the width of this chart from June of last year to March of this year, it is a bullish chart. Price is going up. The general trend is that the buyers are in control. And even though there may have been some interruptions through this shallow rally here, which lasted a few months, and some sideways action here, and we're not yet sure what the outcome of this movement is, but in general, there's nothing here to indicate to us that we should change our opinion that the trend is continuing to go up.